In this session, we will discuss the stock market basics, the brain and eyes of the market, fundamental and technical analysis. If you see brain and eyes in the real world, they are very valuable. With brain, we do thinking, and based on thinking, we take decisions. Similarly, eyes, it senses outside world, sends signal to the brain, and with the help of the signal, we execute things. Both are necessary and complementary. So let us see what are the brain and eyes in the stock market. The stock market is a world on its own where people are coming and they are buying and selling shares. If you see, when we compare brain, also in the real world, we have fundamental analysis which tells us how a business works. Basically, fundamental means you are going to basics and understanding what is around. And eyes in the stock market is technical analysis. If you see here, this is the price of the stock with the time. So it tells what price movement. If you see, we notice different pattern in this chart, and based on that, we say, oh, we should sell or we should buy, right? So if you see this line, so imagine this line is 200 moving average exponential, and the stock price falls down with incoming negative news, we exit the stock. And in the fundamental analysis, we see the management quality, past of the stock, and what are the different brands and what it has in the future. You should understand why I'm saying fundamental analysis is the brain and technical analysis is the eyes of an investor for the stock market. Now imagine if we don't use brain, so what will happen? We can't make good decision, right? So similarly in stock market, we can't make good decision to select a good company. So if we don't apply analysis, that is our brain skills, we will skip good companies and select some bad company, right? For the technical analysis, these are eyes for an investor. Imagine if you close your eyes and start walking, what will happen? So similarly, technical charts, you will surely fall someplace. Tells you what is happening on the way inside a company, because you cannot get real-time news what is happening inside the company. So people who are more closer to the company, they will get the news and they will behave in the stock market by either selling or by either buying the stock. So you will see the behavior of the price action in the technical chart. That's why they are called eyes. So let us dig deep in between. So investor or trader comes in the stock market. He has two options: fundamental analysis and technical analysis. Some people go directly to technical analysis and start doing trading. They don't know about the companies, what this company does. Only for them, this price matters, how it is behaving, what pattern it is making. And other set of people is which focus on fundamental analysis. They see how the net profit is growing and how much I'm paying for this much earning company. And now if you see, you got the value of the company by analyzing this profit and loss and balance sheet. If you ignore technical analysis, you still can do fundamental analysis. There is no problem in that. Only issue is that you don't know what is the right price to buy, because technical chart might tell you, for example, if you plan to buy here, technical chart might tell you that stock is in downtrend, you should wait for the trend reversal so you get the value and the correct price. And if you get good analysis, you can double the number of stocks in the same money if you buy the stock at half price, because chart was telling you. And if you were only fundamental analyst, you ignored the chart. So what we see, both are safety net of your money and both are necessary. So you should use both analysis to reap maximum benefit. So let us see what is technical analysis telling you here. So this is the example of Yes Bank, which was screamingly telling sell. So if you see here, there are I have marked averages. One is 20 EMA, 50 EMA, and 200 EMA, exponential moving averages. You can read about it, or I will cover in future session. These are basically averages. I suppose taken of 20 EMA. So 20 days back, they will do average, and it is exponential. So it will be more correlated with the recent points. You can take simple average also, which will take the whole average. So what happened this time around, there was negative news in the Yes Bank that RBI, the Indian bank regulator, will not allow the current CEO to function as usual. So you should think in your mind why the RBI is saying so. They have doubt on the promoter or the CEO. Okay, that is one thing, one input. But if chart is also reacting based on the news and with increasing volume, if you see here down here, volume is number of shares exchanging hands, and the share price start falling. And these are the important averages 50 and 200. So even if you ignored 50, you are sitting in hope, but you should not ignore 200 because it is a very long time average which once breached, it might take long time to come back. And there's a news, so it can be very risky. So you can exit here, and once the dust settle, maybe here around that, you can think of the re-entry by understanding the Yes Bank fundamentally, whether you should invest, and then see the price action and then take the entry. That's it for this video. If you have any question, let us discuss in the comment section. Thank you.